Hello everyone, Larry Lavrentis for Ichimoku.co and ForexTrading.tv with a daily analysis of the US dollar Japanese yen for the trading day ending Thursday, January 23rd, 2014. Well, a very bearish candle today, and a candle that initially was testing up towards the resistance around the 105 level, testing up above the previous day's high and even tested above the high of the candle prior to that of these indecisive candles. This rally that we saw on these indecisive candles really set this market up for this bearishness that we've seen in the market for today's trading. The sellers came into this market after they were rejected from the 105 level. Their buyers lost commitment very strongly, and the sellers tested the market down below the Kijun-sen and Tenkan-sen and through the 103.75 level. There was potential for 103.75 to act as support. It has acted as support on multiple occasions in the recent past, in the last month or so, but the sellers were strong enough to take out that area. We did see some price rejection from the 103 level, and that was a level that's been tested and held, where we saw the buyers coming quite strongly about 2 weeks or so ago, and there is a possibility of that occurring here again. Having said that, however, the sellers have maintained strong control of this market. They have been strongly committed to taking this market lower, and trading the market down through the Kijun-sen, Tenkan-sen and the 103.75 level may be quite significant. Now, if this market does rally, there is a possibility of finding resistance around that 103.75 level now. The previous time that the market did sell off in this manner, however, the buyers came in strongly to take out that level, so it will be a crucial area for this market moving forward. In terms of Ichimoku, still a bullish market in the longer term time frame, but we are trading closer and closer to the Ichimoku cloud and suggesting that the market is finding equilibrium in that longer term time frame, where we don't have as strong a bullish bias as we saw over the previous 2 months, and we do now have a bearish market in the medium and fast term time frames. And now for the second period, we have the market closing in a bearish manner down below the Kijun-sen, and that does suggest that all is not well for the buyers in this market. If we look at the previous time when we saw the market test below that area, we had a bullish breakout, very indecisive trading following that for about a couple of weeks. So are we going to see that pattern again? It really does depend on how the market reacts to this 103 level, and if we do see the buyers come in strongly enough and close strongly up above some of these levels that we traded to in the past. But this zone here between 103.75 and 105 is a zone where we see the buyers lose commitment, so the market will have a tough time trading up through there and trading through the 105 level. Really a market that isn't a good trading market at the moment, quite some volatility, especially when we're selling off here. So perhaps we are beginning to see the market change sentiment in that longer term time frame and eventually trade through that Ichimoku cloud. The cloud is quite strong, and it will get stronger as we move into the middle of February. So the sellers will need to be really showing some very strong commitment if we are going to change this market into a long-term bearish market. So there's no confirmation of that happening at the moment, but with the sellers being strong in this market for this candle that we've seen for today's trading, we are going to focus on this 103 level, and then if the buyers do come in, as we're seeing at the moment in this candle that is developing, the 103.75 area will be important.